Another thing that I've noticed, John, is the reflation trade is very much in evidence, particularly commodities. You've got a commodity index tracking fund. The symbol is PDBC, Peter, Dog, Boy, Charlie. That's a basket of commodity futures contracts that, of course, rolls over. Big inflows, I see, outperforming the S&P 500 this year. Tell us about what kind of people are buying these commodity funds, and how do you protect against that negative roll? We all know about that problem with owning futures contracts, particularly commodity futures contracts with that negative roll.
Yeah, thanks, Bob. So first of all, address the roll topic. This strategy actually uses a smart roll technology. It looks at the curve of each of the underlying commodities and finds the most optimal place on the curve to roll. And so it is seeking to get ahead of issues around contango and backwardization. But let's back up a second here. A number of analysts think we are entering a new super cycle in commodities. Again, we're not sure about that. But when you look at the inflation, the commodity fundamentals, the discussion around that, what's happening from the administration as it relates to infrastructure, clean energy spending, electric vehicles, this is what's prompting these client conversations. How do I participate in these movements? And so at Invesco, as you point out, Bob, we pioneered that space with commodity ETFs, broad exposure. This particular fund has doubled from $2.7 billion to $5.4 billion just this year, since January of this year. Again, a simple way to get broad exposure to your metals, your ags, your energy in a single solution with a smart roll technology built into it.
And yet commodities as an asset class, we've recognized commodities as an asset class for decades. And yet, given what's been happening in the last 10, 15 years, nobody owns them. It's hard to tell anybody, you should own 5% of your portfolio in a commodity ETF even, just like it became hard to argue about having gold. It's a tough call, and yet that would have been the smart call.
It is interesting, right? There's an academic science here that does show having commodities as part of a portfolio does reduce overall volatility of a portfolio, but you're right, usually that's played out in the form of gold. Nothing wrong with that. Gold's performed really well over the last few years and maybe even decade if you start to chart it out longer term. But at the same time, we look at commodity flows this year, Bob, and what do we see? Year to date, almost $10 billion leaving gold ETFs. But what I think what John and team are doing, right, is they're starting to say, hey, maybe we look at commodities at a broader lens. Maybe we take a step back. And John's team putting together multiple commodities in one place. Historically, really hard to access that market. You'd have to be trading your own futures, become, almost a sophisticated institution. What's great about ETFs is they're now bringing that and democratizing that space and bringing commodities, futures. They're able to put a nice, clean wrapper on it, bring it to an end investor.
I agree.
Yeah,
diversification is really a key to success in any portfolio. It's hard to argue about what you should buy in commodities, but a simple strategy would buy a broad, diverse commodity fund like this one that holds it. John, you were making a point?
I was going to say, yeah, and even going back to why the flows are so strong, it's about providing very efficient exposure to this return pattern. In this instance, we're talking about commodities, which have low correlation to equities and bonds. And so when you think about building, Bob, to your point, a diverse portfolio, having an allocation to commodities, we've seen a number of large institutions keep that as a strategic allocation long term, not trying to time it, but the benefit of that diversification. And your question around who's buying this, and Doug's point, it's individual investors, it's retail, it's wealth managers, and it's some of the largest institutions in the world getting this highly efficient return pattern delivered through the ETF. And so I think all very valid comments there.